Sikole ngambulo luku. With whatever we do. Jioni safu no la. With whatever we do. Hale yide munyu skula. Nyepamne ne kudlukula. Nyepangi ragala gena. Nyepamne ne kudlukula. Ibuloke nongoto ni beti sola. Ibuloke dato ni betoto.
Mingi Congo.
Lamin.
Na?
Lamin te jibe norin te nyamen Lamin.
Kabana wulo kono.
Wulo kono nyinta mo Lamin.
Pabilenki.
Muna ngata afongole.
Haina.
Ngata. Ngoto le. Fabrama.
Mingi. Baba nyole.
Ngoto le Fabrama.
Namu jumara kan kuma diten.
Fabrama.
Jumara mu.
Ndele bare muso.
Lunda mana. Jamani mbere.
Alindo ko.
Jamani.
Bari ngoto man kontande.
Bari jamani fana na ramudu ma kontan.
Ngoto minaka ngalamin de fon filitala. Lamin jibe nori nyaala.
Lamin ila siran sama ne benki. Yala so tol sayni no ko mo lokko momo.
Ngoto.
Nam.
Itedinte yalo ne Lamin hakkilo diata bake karambu ngoto. Anu santeng ministry ko di ngole si suko na amanke ko do holi de
si bitun
bagona de
ala ni ko kede namo balo
ala ni na ko na karta bulo be damna ala ni je
ngoto
nam
ngoto mon kontan fere
jamani mu nekata
ite ka Lamin ki wulo ko no nyinta mon ko do fete malo Lamin nyanta sila la be la moy kala karango
jamani karamol be sorande ne ko fasita wulo ko nako
karambu wol ma soron ni ko karambu wol soron da amanke ko holiday lem ngoto dindi wonyanta sila la ala karango la moy yamen kaben fue man kontaan andamande
alla nyin kombo courant adanda la kombo ndo la jankara mol le soron doro kamen courant ma rado la kombo e to ndol fana na kara mol soron je kara mol soron Lamin adara lo nyino la man tara fe na so hon ala mu nekela
am Lamin ite fayde malon ko le sinol be ke kar radio
nga fine
e ko yana di mo Lamin ya mu na fonye
bi tabim mina kan ntambita nteri maning Fatu
ha
tambite la sugal ala dinngol bebe siri be la moy ka
Fatou danso am fana tambita jere ni subala la ngaje dinngol be jet talanta nen kili warol e be seri jelet
sa Lamin fadante ku kili wo ke no la ba Lamin bita ka wulo ko no nyin taymo Lamin
amandara fennela
ite dine ko ni man si yakari la suno la moy radio to e balon na
mu ne ka ke afonde ma nyara ni alon
telentel jikot
afonde ma mu ne be ke
ite balontel be jikritel ni man karambe ku kele yaaje nata karana mbasa malaya ay tarije
par ñarande kombo courant ho findira kombo ide nara yede ni sonka bay ko Lamin ma nyata la wulo ko kara mo be so da fa nyambe be
ko to wole nati bawo ngalle ni Lamin kuntal kombo courant o ka fa me kombo courant asototal wala kinay ko e sisu ko no bari ni ko e sisu ko no ibe karangol dike la radio lin telel to hani tele masoto to nyaay man tele soto la bungo bar radio be bulan ko to batiri sanga ay si ay alamo
sa do kala nyaadi
ko ta o bulaji
ado kala nyaadi
kamun ke nyaadi
radio abe wala mo la ibe mona falaje
ibe la karandirol kala jele
ti talle be radio ko men ka karande
ile subject ro baby jele baby jele
wala nanga chocho moy fa dan so wala ngombe tambi kana ngadi ningol je be ikadum bungo de ko kala ma
asototal de
Lamin mala be karawala de
bari laftalal ideal on ko inde every year second wala fourth
muna ni ko di ha ko nde ko folle sinila mba ndele sinilo ne ba
mba mba foke en koto wole fango yen wulindi yalo famo keta bat yin fana bulata ko ko me yen nati jambi Lamin nyanta karana ntel be jiko be nyineka ya bulay kara wulo kono ta kilar ya bambalo yo be bulaje koto dindi ngoy si ayala le sino la moy radio
wala ga munda kara mo man soro Lamin nyanta kara si so na
radio la sino le ayala le sino
dal ko korno ko smolon
kilar ya
be ngala ko momo sa mi do ni kono kera
mengi bruzo
ndelo ko do la da ba rosa no radio ba no bari woro radio ni abe jele ba ngamra do man dembe buljan dala nyara nyar woro ko fendi mo Lamin tayra ba rosa
bara te ku folo ajibe norinya Lamin tamete ku
mengi mun na re
teku
bari ko do famo ke
imagine nani nyambol si zol le keje kisigi man si zol no le kafun ka nyoma bari nyambu kino ni manya na kafindi ni nambe ko zol laga
ngalle limbeta de be nyambo do dilanna
nyara ni ko rin fennat nyara nata
bari famo kada
ngata bungono tammi bungono nyara ngando ko fele ko ke baru nganda ni pelo la ndija
iyo awa tar la
bungono bismillah bisu diara
pendulala yefungo tanka sina dolu tanka koro korota
Hello, viewers and listeners. Okay, the last lessons we were discussing financial transactions and type of financial transactions. And in the last lessons, previous lessons, we discussed that there are two types of transactions. We have the cash and we have the credit. And what I told you was that the cash transaction, you can use what we call immediate payment. This is immediate. And this one, we can use what we call later. Immediate and later. So now, let's move on to the next point. So when you look at the graphical representative of the business transactions, we have for cash transactions, there are two books we need to consider, for cash, and the other one is credit. So for cash, we have what we call immediately cash transactions are recorded in the cash book and later recorded in the ledger's account. But for that of credit, immediately credit transactions are first recorded in the day books, then therefore they are recorded in the ledger. That's why we say day books are books of what? These are books of primary entry, or these are books of original entry where financial transactions are first recorded before they are transferred to their various ledger accounts. So now, that's the graphical representative. We have the cash transactions and the credit transaction. So the cash transactions, we have cash book. From cash transactions are recorded in the cash book. Then we have what we call the ledger. Then the other one, we have credit. We have what we call the day books, because day books are responsible for recording what we call credit transactions. Then later we have the ledgers that we need to record immediately after the day books. So the next point we need to discuss the steps involved in cash transactions. Steps involved in cash transactions. So step number one, if you are recording cash transactions, we have to prepare the accounts involved in a given transaction. Prepare the accounts involved in a given transaction. If you are given a transaction, there are accounts that are involved. So those accounts need to be identified and we prepare them. So the next point is identify the giving and the receiving account, because we said in every transaction, there must be giving and receiving. For instance, if I say sold goods for cash, so we have a given transaction. So now what happened? The first one, we have to identify the accounts involved. We have the sales account, and then we have what we call the cash account. So that's step number one. So step number two is saying that after when we identify the accounts, we need to identify which one is given and which one is receiving. If you don't identify the giver and the receiver, you cannot able to enter this thing, because we have to identify. Then step number one, after when we identify the accounts involved, we need to identify, that's step number two, that's we need to identify the giver and the receiver. And in this case, for example, we have a question on the board. They said sold good for cash. So we identify sales account. Why sales? Because they say sold goods. In accounting, whenever we say sold goods, the account that exists is sales. So what is the other account? Is cash, selling and receiving cash. So the business is selling their goods and they're receiving cash in return. So this is a cash transaction because it involves cash. Immediate cash is received after the business selling the goods to the customers. But now they're telling you you cannot able to apply the principle unless and until you identify the giver and the receiver. So according to this, cash is coming and the goods are going. So obviously the sales is the giver. We have the sales here is the giving account. This is the giving account. And it's very simple. If you identify the giving account, you don't need to disturb yourself. You can easily identify the receiving. So cash is the receiving account. Cash is the receiving account. So that is why they said, after when you identify step one, you need to identify step two. And that will help us to apply step three. So step two, we need to identify the giving account and the receiving account. So let's go to step three. So step three says that after identifying the giving and the receiving, step three is saying now, it's very easy. We're going to apply the golden rule. What does the golden rule say? The golden rule says we debit the receiver. So the golden rule says debit the receiver. We are going to debit the receiver and credit the giver. See? So we will get our answer. Finally, then all cash transactions must pass through the cash book. And I told you that the cash book is responsible for recording cash transaction and as well bank transaction. So these are some of the steps involved in recording cash transaction. So let's move on to the next one, that steps involved in recording credit transaction. Credit transactions, whenever we have credit transaction, the first thing we need to do, we have to identify the day books. And there are about 7 main types of day books, 7. We have the sales day book, we have the purchases day book, we have the return inwards day book, we have the return outwards day book, we have what we call the petty cash book, we have the cash book, and then we have the general journal. There are 7 in number. So now, whenever we have transactions, the first thing we need to do, we need to record them in the day books. So if it is sales on credit, we record it in the sales day book. If it is purchases on credit, we record it in the purchases day book. If it is returned by the customer, we record it in the return inwards day book. So it depends on what type of credit transaction that occur. So the next thing, we prepare the necessary accounts. For example, if I identify that it is going to be a sales day book, so I have to prepare what we call sales day book so that I can able to prepare the accounts that are necessary in order to get my final answer. So the third step is identifying the giving. So we must identify the giving and the receiving as well. The same thing applies to this one. Why do we need to know the giving and the receiving account? Simple fact is, without identifying the giving and the receiving, without knowing the giving and the receiving, we cannot able to know which one should be debited and which one should be credited. So the giving will help us to know, because the law says if you're giving, even not even accounting, it's ethical behavior, regardless of your religion. We all know that if you are giving, you give it your right. You give it your right hand side. So that's why accounting, they say credit is right. You don't give it left, regardless of your religion. So it is more ethical than to give it your right. So accounting said the right is for the credit. And then, obviously, if the right is for the credit, obviously, the left will be for the debit, because there are 2 in number. Then if I say there are 2 people in the house, they said one is a female, and the first one comes out, one is a female and the other one is a male. And then the first one to come out is a male, obviously the one that is remaining will be a female. Accounting is like that. If you can able to identify the giver, obviously the other one will be the receiver. So now they said you have to identify the giving and the receiving account. Then finally, we apply the golden rule. And what does the principle say? We apply the principle, which says that now, after knowing the giving and the receiving account, so we can able to apply the last one, which the giving, they said the one that is given is going to be credited. And obviously, if the one that is given is credited, I don't need to tell you about the one that is receiving, because there are 2. If you know one, you will know the other one. So obviously, if this is given credit, then obviously the receiving will be debit. So that will be your final answer. So those are the steps involved in recording credit transactions. So we move on to the next one. Books of account. In accounting, there are only 2 books of account that are identified. So we are going to discuss them one after the other, but we're going to focus more on the principal book, which is called the ledger, or we call it the main book of account. So now, the books of account can be defined as, these are various books where detailed financial transactions are recorded. These books is just like when they say diary. Diary, you know, sometimes these words are there. Diary, responsible to recording daily activities. When they say it's okay, petty cash book. Petty means small, cash book, so it's record small cash payment. So accounting also, when they say books of account, these are books that record financial transactions. So these are books responsible. Any book, if I say sales day book, because of it involves money, it becomes book of account. If I say purchases day book, because of it involves money, it becomes book of account. So now, we just want to summarize it. All books that record detailed information about financial transactions are considered as books of account. Now, let's discuss them one after the other. So the first one, we have what we call the principal book, which is called the main book, or we call it the ledger. This is the main or the principal book of account in which all financial entries or transactions concerning a business are recorded or entered. Thus, the final destination of all business transactions. So sometimes some people, instead of writing all these things, they call it the final destination of all transactions. Because if all transactions reaches the ledger, that is the end, that's the final. So if transaction come up to the ledger, that's the end of it. You balance the ledger, then you extract what we call trial balance. So that is what ledger is. It is the main book of account, is the principal book of account, and is responsible for recording the final destination of all transactions. So the other book of account we have is called the subsidiary books. Although subsidiary book is a topic of its own, but I just want to tell you what is the meaning of subsidiary books. These are books of prime entry into which financial transactions are first recorded as they occur before they are posted or entered in their various ledger accounts. But we are not going to discuss it for now. We're going to discuss it in the coming lessons. So what we're going to discuss here is going to be the principle or the book of account or the ledger. So now, let's talk about the classification or division of ledger. So if you look at the classification or division of ledger, there are about 5 of them, 5 main classification of ledger. 5 main classification of ledger. The first one is, we have the sales. The sales ledger. Let me tell you, sales ledger talks about debtors or customers. Debtors or customers. Let me tell you the secret why sales talks about customers or debtors so that you can easily remember it. Sales, whenever we are selling to customers or we are selling to debtors. So obviously, because of sales has to do with customers. So this ledger is a book. It's a book that's responsible to record information regarding debtors or customers. So therefore, if you want to understand it, it's very easy. Just look at sales. Sales, we don't sell to suppliers. Business don't sell to suppliers. They sell to customers. So obviously, because of sales has to do with customers, they say this book is responsible for recording information about what? Personal accounts of what? Of customers. So simple sense. But the next one, if you want to know about that of, for that of purchases, that's why they say sales ledger. This is a book which contains personal accounts of customers or debtors. And I told you the secret. Whenever you are selling to customers. So obviously, because of sales has to do with customers, then therefore, we are not going to say sales ledger is a book. So sales there talks about customers. So ledger talks about a book. So therefore, this is a book that records information about, it contains personal accounts of debtors or customers. So simple sense. So if you know for that of sales, you can know for that of purchases, because the opposite of sales will be purchases. So purchases, when we are buying, it has to do with the goods that are bought for resale by the business. So purchases, if you are buying, you buy from what? The business, they don't buy from customers. They buy from suppliers. So it's either creditors or suppliers. Creditors or suppliers. So therefore, knowing this concept can help you remember whenever you are asked to define purchases ledger. Purchases, when you are buying, you buy from suppliers. So ledger is a book. So if I combine these two, will be purchases ledger. This is a book which contains personal account of what? Suppliers or creditors. So that is the definition for the sales ledger. Now let's move on to the next one. Private. Private. You know, accounting, whenever we talk about private, we're talking about 2 things. One, we talk about drawings. That is, these are resources that are taken by the owner for personal use. So therefore, we talk about capital. So capital also is the resources of the owner and that he invested into the business to start a business. So therefore, if you look at private, we talk about 2. So this account is recording what? Accounts, it contains information. The book records information about what? Capital and drawings. Capital and drawings. That's why it is defined as purchase private ledger. This is a book for capital and drawings of the proprietor. They are confidential in nature, very confidential because they are private. So you see, if the owner withdrew, drawings is what the owner withdrew for personal use, not for business use, and capital is what the owner put into the business to start the business. So that's what the business, the owner invested in order to start a business. So therefore, the next one we have the general. The 4th one is called the general ledger. The general ledger is responsible. This is a book for real and nominal accounts. Examples, that's why we have real for nominal. We are going to talk about what are real accounts and what are nominal accounts in the coming lessons. So the example we have is what? Expenses account, which is an account for nominal, is a nominal account. Income account is a nominal account. Sales, purchases, and others, they are all examples of general ledger. So this is a ledger. Some people, instead of writing, this is a ledger for books of is a book for real and nominal accounts, because all what you normally, some people said this is a ledger for expenses, income and others, but all these things are classified into two. They are classified into real and nominal. That's why some people, instead of writing all those things, they just summarize it and write general ledger is a book for what? For real and nominal accounts. So the last one, which is called the fifth one, is the cash book. The cash book records cash transactions and bank transactions. But there is something that I want students to understand, that in exams, if WAEC suppose asks you to prepare, some students will write personal ledger, and after they write sales ledger, this is wrong, because personal ledger is divided into two. So if WAEC asks you to write 5 of them, if you write personal ledger, you cannot repeat purchase ledger and sales ledger. It's wrong, because personal ledger is divided into sales ledger and purchases ledger. That's why now people, they don't write the personal ledger, they just write sales ledger, and they write what we call purchases ledger, so that they will explain them and have more marks. And I think that is better than rather than writing the personal ledger, because if you write personal ledger, it is depriving you from writing sales and purchases, which is not going to be correct. So avoid writing personal ledger, then write sales ledger, purchases ledger, then private ledger, we have general ledger, then we have the cash book, which is going to give us the 5 main types. So the next one, we have features of a ledger. If you are asked to prepare a ledger, we need to know what are the features. The features of a ledger, the first thing is that the ledger is divided into two by a central line. By a central line, like this, a T format. This is the central line, and this is it. So the next one is that the left side represents the debit. This is the left side. This is my right, and this is the left. So this one represents debit. It represents debit. So now, if this one represents debit, the right side represents credit. This is the right side, which represents credit. And the other one is the debit side is the receiving. This is the receiving. And if this is the receiving, we don't need to ask. This will be the giving. This is the receiving, and this one will be the giving. So the other one is both the debit and the credit side has a column for date. We have a column for date. We have a column for detail. We have a column for detail. We have a detail. Until we have folio. Then finally we have the amount or the value. So the same thing that we have to write here. Date, details, folio, then we have the amount or value, both on the credit side and as well on the debit side. So the next one we have is account. What is an account? Because we cannot able to prepare the double entry in the books of account without knowing what are accounts and their types. So an account can be defined as a record of financial transaction in double entry system for that is kept for each class of assets, liability, revenue, and expenses. I repeat, an account can be defined as a record of financial transaction in a double entry system that is kept for each class of assets, liability, revenue, and expenses. So that is the definition of an account. So the next thing is we need to know is what are the types. There are 2 main types of account. But normally if you look at some people, they don't say it's 2 main, they say 3 main. But there is a reason why. Because that's why students should be very careful. If WAEC said or a question happens to come in exams, they say 3 types. What you do is that these 3 types, they never existed. It's 2 that they classified. Personal and impersonal. So what you do is that there is a little secret here. The impersonal is what is divided into 2. The first one is called real and the other one is called what? Nominal. So what do you do as a student? If they say 3, you say 1, personal. The other one, 2, don't write impersonal. Because if you write impersonal, you cannot write real and nominal. Then therefore, you are getting 2 instead of 3. So what do you do? Avoid writing impersonal. You write real account and nominal account. So personal will be 1, real will be 2, and the last one will be nominal, which is 3. But if WAEC only say 2, it's not a problem. You can just say personal and impersonal. It will help you to explain this one more. You can explain it by saying this account is divided into real and nominal. You can easily define it. But if they say 3 in exams, you need to be very careful. If they say 3, you need to make sure that you divide this one into 2. Instead of writing impersonal, you are going to write personal, real, and what? Nominal. Now let's see what are personal accounts. Personal accounts. These are accounts for names of individuals, firms and business enterprises. So now, some people even further divide personal accounts into 3. They call it natural account. The natural account here is talking about the person themselves. There are 2 personnel in account. We have in accounting the debtors, and then we have what we call the creditors. So these are the natural accounts. So the other one, they said artificial. The artificial is the institutions, the business. The business. The artificial talks about the business. So the business, they talk about artificial. And the next one, the last one, they said representative. They talk about the representative. So now, you can just give example of personal account. That's why they say personal account is not only account for debtors and creditors. It can be also account for businesses, and it can also account for what? For companies or other enterprises. So therefore, we need to put this thing into consideration. For example, we have personal accounts these are accounts for names of individual, firms, and business enterprise. Example, we have been to Agay's account, that's a debtor. SPO9 Limited account, that's a creditor. These are examples of personal accounts. We can also have other example of personal accounts. We have the bank account, is an example of personal account. We have what we call drawings, is an example of personal accounts. After the drawings, we can have what we call prepaid expense. These are example of personal account. Like wages prepaid is an example of personal account. Not only debtors and creditors, but all these things are considered as example of personal account. So let's go to the impersonal. These are accounts for properties, items of expenditures, and incomes. But some, to make it very simple, is personal account. You know, we said personal accounts. These are accounts that talks about businesses, debtors, and others. Now, impersonal is any other account other than personal. Anything that has nothing to do with personal is considered as impersonal. That's why it is further divided into 2. We said personal accounts, impersonal accounts are accounts for real and nominal. So what do we need to know now is, what are real accounts and what are nominal accounts? Real accounts are accounts for tangible and intangible assets. But many people say real accounts are accounts for tangible. No, it is also tangible and intangible. Tangible assets are assets that we can see, we can feel, and we can touch physically. So that is why they say real accounts. Example of these real accounts are called what? Plant and machinery under tangible. We have land and building under tangible. But the example under intangible will be goodwill, patent right, royalties, etc. So those are examples under real accounts. Is there accounts for tangible and intangible assets? So let's talk about the nominal. Nominal are accounts for what? These are accounts for expenses, incomes, profits or losses. These are all inclusive. So the nominal records the accounts for expenses. That's why example of nominal accounts, we have the rent account, we have the discount receipt account, we have a lot of them. We have the insurance account. These are all examples of nominal account. So now let's look at the double entry rules. I think I described this thing. That was a diagram we showed under the accounting equation. It's the same thing that we are trying to see on the board here. So now the first one, we said the entries that always have debit entries account are 1. We have the increase in assets. Increase in assets, when asset increase in value, the law says we need to debit them. Increase in expenses, accounting, expenses and assets, they have the same principle. So therefore, if you know for assets, you can easily relate it for expenses and you get your answer right. So now, the increase in expenses is also debited. The next one, we have decrease in liabilities. Liabilities, income, and capital, they all have the same principle. So you will see Decrease in liabilities, they are always what? Debited. Decrease in income, they are always debited. Decrease in capital, they are always debited. So now, credit entries accounts are just the reverse of what we just said. The first one, we have decrease in assets. Decrease in assets, when assets reduce in value, they are always debited in the account. And decrease in expenses, when expenses reduce in value, they are always going to be debited in the account, in the books of account. Then we have what we call increase in liabilities, increase in income, increase in what? In capital. So those are the rules for double entry. So now, let's look at an example of an account format. So that's the format we have. It's just similar. So what we have the debit side, we have the title, that's the name of the account. Then we have what we call the credit entry. So now, note the following below. The first thing, the title. What is the meaning of the title? Here is where we have the title. The title talks about is the name. If I said sales, sold good for cars, the title of it, if I open sales account, the title will be the sales account. So now, the title is the name of the account. That's why in accounting, if the name of the account is wrong, forget it. All the others will be wrong. It's just like when you have an ID card, your picture is correct, your image, everything is correct, but the name is wrong. Obviously, the ID card will be considered invalid. So accounting, the title is very important. Even when your entries, everything are correct, but if the title is wrong, that's why the first thing they need to tell you that you need to identify the accounts. If the identification is wrong, forget it. The second step, the third step, the fourth step, they are all considered as wrong because the title is what tells you actually what type of account is this. That's why we need to know the types of account before we even start the double entry system. So the next thing we have the detail. It shows the brief description of a transactions, how the transaction, so it describes, it tells you what actually happened. Here, when you look at here in a given transaction, sold good for cars, the description, the detail will tell you what actually happened. What actually happened. So they are telling us that the business is selling. But what happened? When they sell, they receive cars. So that is what the detail will tell us. It will tell us actually the description of the transaction. So the folio, normally some people call it references. So folios is the reference, is the column for reference in the ledger. If you go to the ledger, you can easily identify the accounts by looking at the folio which serve as a reference. So the last part or the other one that we have is the date. The date will tell you when actually the transaction occurs. When actually the date is one of the most important thing in accounting because transactions occur at a particular time, period of time. So therefore you need to know the date so that you can able to relate each transaction that occur in a business. So now the next one we have is the layout for the T account. So the T account, this is just like the T account. But normally if you are preparing a T account, the folio, we don't need to write the folio. But if it is the British style, like those people, they would like to put the, but actually folios are not that much considered when we are using the T format. What we have is only the date and we have the narration. Even this detail, we call it the narration. It narrates what actually happened. Then the value tells you how much was involved. So the date tells you when the transaction occurred. The narration tells you how it happened, and then the value tells you how much was involved. These are the three main features in a given account. So we need to know them. So the date, the narration, and actually, you don't need to write them when you are writing the T format. You don't need to write date and all those things. We're just trying to explain it, that's why. But if you are solving the question, well, you don't need to write all those particulars. So now, the first thing we need to know is that we explain it. The left side represents the debit and the right side represents the credit. So points to remember, each transaction affects two books of account. Each transaction, like for example, we have a given transaction, we said sold good for cars. So therefore there are two effects that are there, books of account. One, we have the sales account, and then the other one is called the cash account. So the next point is, the other point is one book gives out value and the other one receives the value. We discussed these two. One will be given, and here the sales is the one that is giving the value, and obviously cash is the one that is receiving the value. So what is the last one? Is the giving account is credited and the receiving account is debited. So after knowing which account is giving out the value and which one is receiving the value, you can able to you can able to relate it and you get your answer right. So now, the other thing that we need to know whenever we prepare an account, we need to learn how to balance of accounts, because balancing of will help us to prepare what we call our trial balance. So if you don't balance up your account, you cannot able to prepare your trial balance. That's why at the end of all financial recordings in the ledger, we need to balance up the ledgers, and after balancing of the ledgers, we can able to extract what we call our trial balance. So now, what is balancing of accounts? This is the act of equalizing the total of the debit of both the debit and the credit side by adding the debit balance into the credit side of the account and adding the credit balance into the debit side of the account. So now you will see that I will explain that when we are trying to solve a particular question. So now we need to understand something. Balance carried down. What is the meaning of balance carried down? This is the closing balance of a ledger that pulls to the next, you see, closing balance. That's the end. Is the closing balance of a ledger. We call it balance carried down. At the end of every ledger that we prepared, the closing balance, that's the difference. We talk about that. It's what? Is the closing balance of a ledger pushed to the next. That's why, what do they mean by pushed to the next? It means when we have a closing balance, that balance will be forwarded to the next period. So we push the closing balance and then we pull the what we call the opening balance. So therefore, push to the next accounting period and represent the difference between the debit and the credit side of the account. So we will explain that when we are solving the practical question on the board. So the next one we have balance brought down. This is the opening balance of a ledger pulled from the previous accounting period. Previous accounting period. So we have what we call the types of balance. There are only two types of balance. The first one is called the debit balance and the second one is called the credit balance. But this balance you see, you can easily understand it. Debit balance in accounting, when they say debit balance, it means this is the excess of debit side over the credit side. Thus, the balance brought down is always found on the debit side of the account. If you understand that one, you can easily understand the other one, which is the credit balance, which is the opposite. This is the excess of credit side over the debit side. Thus, the balance brought down is found on the credit side of the account. Thank you so much for listening. We will continue our next lessons in